Right. And let's relate this back to gold and silver, maybe starting with gold specifically, because there's this kind of narrative that inflation is good for gold if the Fed pulls back, if they start tapering, if they raise interest rates, that would be negative for gold. What's your view there? Because I don't know if you would necessarily agree with that.
Well, whether I agree or not, that's the way the futures traders whose actions we incorrectly called the price of gold, that's the way they think. And over the last year and a half, we've seen that in spades. Every time it's crazy. Every time there's a headline about higher inflation, gold gets whacked. So I think that actually this is a really important point. And if people don't remember anything else from this interview, Charlotte, I think this is a key takeaway here. As you and I speak, gold is still over 1,800. Despite this much more hawkish than expected turn in the minutes. But at the same time, we've got 30-year level highs in CPI and PCE, the Fed's preferred form of inflation. I mean, these are big headline numbers. This is a big deal. And gold hasn't gotten whacked down. It's still holding above 1,800 and has been fluctuating there all year long. I mean, think about it. The last time in 2011, when gold got over 1,800, it was a matter of days. We've spent a year there, and people are pulling their hair out because gold isn't going higher. But to spend a year at such actually record, at least nominally high gold prices is phenomenal. And it's actually very good for the business of mining gold. And if the gold stocks don't go up when the gold miners are making money, they'll pay it back in dividends. We've seen that actually in spades in some companies. So the actual business of mining gold and silver is doing fine, and there's opportunity there. But to the point of the question, I actually think that there has been a change in the marketplace here. What has been whacking gold down consistently over the last year and a half has not in the last few weeks. It's not as you and I speak right now. This is the kind of news that before would have just, been one of those days that has everybody screaming manipulation and all that sort of thing. And there is a reaction. Gold's down, dollars up, rates are up. But it's not a big meltdown. It's not a big deal. I think this is evidence of a change in the marketplace. I'm not sure that the traders have actually changed their perspective. They think the Fed's going to raise rates and that's going to be bad for gold. But I think other people, investors out there, are really starting to get concerned about high inflation. They're starting to think about hedging their bets. I have seen on mainstream financial media, like normal investors, people who don't normally buy, penny stocks and mining shares and stuff like that, talking about, we're starting to tell our clients that maybe a little bit of hedge with gold is not a bad idea. And that's huge because as Rick Rule has told you, I'm sure in your audience many times, right? The historical average is something like 2% allocation to gold in a portfolio as a hedge, as safety margin. And now it's like 0.5. So if it reverts to the mean, it's a huge increase in demand. But even if it doesn't revert to the mean, but if it goes from 0.5 to 0.75, that's a 50% increase in allocation. That's huge. So people are starting to think, well, things are scary. There's high inflation. Maybe a little bit of a safe haven component in my portfolio isn't a bad idea. That is big. And I'm not saying that's a done deal, that Rick Rule's prediction of reversion to the mean is coming true. He didn't predict it. He said if. I'm just saying there's evidence in the marketplace right now that something has changed. And if it's this thing, if it's ordinary people saying, you know what, I'm a little nervous. I'd like something real, physical value that I can put in my portfolio as an anchor. That could be a game changer.
Right. So we're starting to see this, trickle of people toward gold, people who are feeling a little bit uncomfortable. Do you have any sense of what could be the tipping point there where people lose confidence in the Fed to a greater extent?
Yes, it is. I'd love to see that emperor has no clothes moment when the little boy says, look, right? And everybody realizes that they really can't control the economy the way they think or say they can. But maybe not. If that actually happened, we could set off a larger collapse than any of us really want to live through, personally. But I think even getting close to that can be a highly can be an inflection point. That can be the catalyst we're looking for, where, the Fed is saying they can control the inflation. But can they? We also know that the United States government and other governments have huge amounts of debt, the record amounts of debt, and the debt to GDP ratio above the red line for many of these countries. And then never mind the theoretical red line of debt to GDP ratio, just the serviceability of the debt. If interest rates go up, where does the money come from to pay all those trillions of dollars of debt? And especially if the economy is struggling and you don't want to raise taxes and that sort of thing. So it really is the rock and the hard place coming together for the Fed. And whether the emperor is revealed as having no clothes or not, when the Fed is clearly behind the curve, when everybody sees that they're behind the curve, it may not be a blow up of, oh, there's no hope, but they see that the Fed is behind the curve, that their actions are not keeping up with inflation, or they're not able to normalize in any way. They talked about reducing the balance sheet, but talk is cheap. If they talk, but then they don't follow up, then I think that can be the catalyst. When, in other words, the powers that be in general around the world, and the Fed in particular, have been very effective at convincing investors that they are in control. They know what they're doing. They got it all under control. It's all the pandemic. They've done such a great job managing the economy through the pandemic. Everything's going to be fine. I'm skeptical that's true. And when that skepticism becomes widespread, that is, I think that is your catalytic moment.
Okay, now I think that, coming off of last year, you mentioned that gold was really maintaining at almost record high prices. And yet we did have people who were disappointed in its performance. So as we look toward the new year, I want to talk a little bit about headwinds for gold, things that could keep it down this year or send it lower. What are you seeing there?
The things we've talked about already, the taper is happening. And again, since we look at, the price of gold is not what you or I pay if we go down to a local coin shop and buy an ounce or whatever. It is a futures contract that gets traded back and forth. And we call that the price of gold. So those guys have their algorithms, they have their models. I think it's crazy to use old models when you're literally in uncharted waters. Everybody talks about, oh, we're in uncharted waters, but they still use the same models that they thought worked, years ago. So I think this is very dangerous. But it presents a headwind. We still have that potential for, high inflation, ironically seeming bad for gold, because people are going to say, oh, that's going to change the direction at least, or real rates may remain negative, but they won't be as negative because of the interest rate change. We'll see. We'll see if the Fed even follows through on the dot plot promise or guidance, not a promise. And remember, two of those dots are changing. So we have new members on the FOMC. We'll see if they actually do what they say. I have a feeling that they're talking tough, and they're trying to prepare the market. They're trying to see if they can get some sort of advanced credit, achieve some of the goal without actually taking those measures. And then when the rubber hits the road, then they start doing these things. To put these together, so headwind, the taper and the reality of the taper could be near-term bearish for gold because people say, oh, interest rates will go up and that'll be bad for gold. If they do a token 25 basis point rate hike afterwards, especially if they do it right afterwards, the taper finishes on schedule or sooner, and they jump right in with a rate hike, that will be perceived as very hawkish, even if 25 basis points, when we're dealing with, who knows what, 5, 6, 7% inflation, it's nothing. It's insignificant. It doesn't begin to even put a Band-Aid on the hemorrhaging, right? But as a directional change, as a market signal, especially if it's seen as quickly, oh, they're being authoritative, they're being assertive, they're jumping in there and fighting inflation, right? That could be a headwind. But at the end of the day, prediction, expectation, I think the Fed remains behind the curve. I think they do too little, too late. I think real rates remain profoundly negative. I think there is a very real risk of anything they do proving to be beyond what markets and ordinary people expect, and huge investment reactions that causes the